the closing beat, everybody. Happy Tuesday. How's it going out there? You having a good day? Hope you're having a good day out there. We're financial advisors here at Jazz Wealth. It's just a quick show that we do called The Closing Beat to go over the stock market, the good, the bad, and the ugly, and maybe share some stats and data and stuff with you. We're very much data-driven here. We don't make emotional decisions, and I hope you don't either. We're also financial advisors. We manage long-term retirement accounts or long-term investment accounts for investors of all sizes. If you happen to be out there working with another advisor and they're just not working with you, teaching you, helping you, answering your questions, well, hope you'll check us out at Jazz Wealth. Thank you so much for doing that. JazzWealth.com's website. It says on the shirt all the time, so you know what I mean? That's marketing. That's about the extent of our marketing here. $8 shirt. Hey, anyways, we're also playing a game. It's called Guess the Dow. You could call it marketing, but you go to the website, take a guess. JazzWealth.com/guess the Dow. There is no marketing, so we don't actually market to you. But if you're the closest without going over, we'll send you a $100 gift card, physical gift card, none of that digital stuff anymore. We'll mail you something so you don't have to tell the missus about it and you go spend it on anything you want. And if you're one of our customers, we'll credit your account $100 like our winner. Jonathan Sampson last week was one of our customers and was the closest without going over, got $100 going to his account. Should be there by now. Yeah, you don't have to be a customer to play. Also, our Jazz Artist of the Week is Stan Getz. If you're feeling like hanging out tonight, just put a little Stan Getz on. Get the vinyl recorded version. You can get it on YouTube and stuff still. Hope you'll check that out. Anyways, let's start with the stock market here today. You got a loss of about 1/3% on the Dow, 1% on the S&P, and 0.5% on the NASDAQ. Interesting day. A little more volatility today if you're playing along with that sort of thing. And also I want to point out real quick, no show tomorrow, no closing beat, no Outside the Virus, taking the day off from that. Got some things to do, so we'll be back on Thursday for that. Sorry, leave you in the middle of the week, but got to do it. Let's take a look at the S&P 500. There you go. Still in the chop zone, basically. A little bit above it. People pretty optimistic. However, we covered this with our customers 2 weeks ago in the Wine and Wealth class. Probabilities of the market going up, probabilities of the market going down. So far, we've basically done nothing since that class. We've gone sideways. We are below where we talked about in that class. And the markets just keep going back and forth. I shared with you guys here on the show the kind of the stats of the sell in May and go away stuff. We're behaving just like May typically performs at the moment. So there's nothing out of the ordinary in terms of the month-to-date type performance. You can see the S&P 500 started higher today, tried to get up there. It sort of hovered around the, what do you call it, the zero line, flat line for the day. And staying under the 200-day moving average. The NASDAQ was your strongest index out of the group today. It has been. Many of the days it's been the strongest there. Maybe a little extended in the short term. People starting to think about that today. It is up 2.4% year to date, believe it or not. And there's not very much more to go. One way to look at this, just kind of a fun thing. If you got the market here and you see where my line is on the chart, let's just go over real slowly. Come on over here. How many people have a losing position if they invested in the NASDAQ? Well, it's only these people from here to here. All right? So you don't have a lot of emotional investors at the moment. Imagine down here, right? You can't make that argument there. You got a lot of emotional investors. You can understand why the market sold off aggressively, fear, and all that great stuff. Down here, of course, most of us probably had at least a significant pullback in our accounts. You're erasing over a year's worth of data. But take a look at where we're at now. Ask yourself, how emotional are investors? And there's not a lot of reason to be emotional. If you are a long-term investor, you're basically on the sidelines. You got your money invested and you're standing there going, all right, you're not giving me a reason to panic on the downside. I have no reason to get excited at the upside. That's where the NASDAQ's at. Today in the NASDAQ, Facebook was the biggest weighted stock that gave you the most, the best performance on the day. Facebook almost back to new highs there. Facebook has Facebook Shops. We'll cover that in a second. Otherwise, up basically 1 3/4% on the day. I want to point out a couple other stocks in there. You may have noticed in the NASDAQ, you got the Zoom. You like Zoom? Zoom up 5.5% on the day. They basically said they're not going to let new users in China sign up for their service. I don't know what's going on there. Everybody's ganging up on China again. Not that I'm for it or against it. I'm just saying. Workday also higher, 4.5%. And to be honest with you, the software as a service kind of space there, your Adobe, that was one of the leaders in the NASDAQ today. Autodesk, if you happen to be looking at those types of stocks, those were the ones that outperformed. And some gaming stocks or gaming-related stocks like Take-Two, there you go, hit new all-time highs there on Take-Two. NVIDIA, just a couple of the NASDAQ stocks that were sticking out. If you look over at the Dow today, the Dow's going to be your underperforming index and has been that way. The Dow's down 15.2%. Only the Russell 2000 is weaker than the Dow on a year-to-date basis. Kind of back and forth, same chop zone there, same May performance, same expected, everything that we've been talking about. Home Depot was one of the focus areas there. Home Depot, which had earnings, we'll cover that, down 3% on the day. Procter & Gamble down 3% on the day, 3.25%, and Boeing down about over 3% on the day. Those were your biggest drags on the Dow. So because of those three stocks and a couple of the others, but these were the heaviest drags on the Dow, you got the Dow a little bit weaker than everything else, the other indices. Okay. You've seen this story before. You know what's going on here. You had tech leading the way today. We started the day with tech leading the way, and then just like we've seen before, tech did not hold itself. It instead went to join the financials, meaning being weak on the day there. There was also a report to follow up with Moderna. Was it Moderna? Yeah, I'm sorry. There was a report to follow up with them. We covered this yesterday. The data that they gave about the vaccine yesterday was based on such a limited phase 1 details of the study, which is still ongoing, by the way. And so basically an article came out today from people much smarter than me, Stat News, and they basically said, yeah, that's not cool. That's a very limited amount of data. We have some concerns. Not rooting against them, but we have some concerns. And so that pulled back the stock. Moderna today also kind of didn't help the market, right? Because we were like, hey, we rallied all day yesterday on this good news. If it's not technically the best news ever, why were we rallying there? So a little bit of question in the market today. Also, Moderna, these guys are smart, right? I don't say I agree with this, but they're smart. Today they say, well, overnight, they say, you know what? We saw all the attention that we got. We're going to raise $1.25 billion in a secondary offering. We're going to price those shares at $76 a share. $1.25 billion. They have sales of like 50 million. They have no earnings at all, right? So they lose money, and they're going to raise $1.25 billion. That seemed just so weird. It got me thinking. I'm like, how much money could we raise? My God, we could have like 10 different studios. This would be crazy. So fascinating that they're able to do that. They're going to do it, and they'll be successful at it. They'll put those shares out there. Highly likely, it's going to be more than $1.25 billion as well. So money is loose, man. Money's out there, and they plan to get themselves some of it. I have concerns about their study and everything going on. Anyways, back to the S&P 500. You know what today is? It's an anniversary. Today is May 19th. That's going to be the 3-month anniversary from the virus high. February 19th, if you're not familiar with it, is labeled as the start of the virus, coronavirus there. February 19th is the high of the market. That's why they labeled it that. Anyways, 3-month anniversary. The S&P, let's go over here and show it. S&P 500 still down about 13% from the virus high. So what you're seeing on the chart here is over from February 19th all the way to today. You got down 13% on the S&P 500. You've got 19% overall on the Dow. The Russell continues to be the worst performer, not by much. It's playing catch up a little bit, down 20% overall. And the NASDAQ down 4% from the virus high. Zoom out a little bit further if we can. I might have messed this up. Nope, looking good. Year-to-date performance for the major indices there. You've now got the NASDAQ 100 higher by almost 7%. It's different from the NASDAQ Composite, different from what we show on the screen there, just as a heads up. NASDAQ 100 up about 7%. All the other major indices down on the year overall. But interestingly, if you go out and look 1 year back from today, tell a whole different story here. You got the S&P positive by a fraction of, a little bit, 4% there. The NASDAQ 100 up 25% over a 1 year time period. This is just a fun way to show, hey, if you're investing in a short term, hang on, right? It's going to be a little rough once you get started there, just like anything else. You're getting started with something and maybe a rough start, but then you get better over time. There's a 1 year look back at all of that. Very interesting there, what's happened with the major indices in terms of the NASDAQ 100 almost being back at highs. Everybody else recovering at 50% or just slightly less than 50% depending on where you're looking there. So that's the major markets. Let's move on. Hey, I got one more thing for you. I'm here. No show tomorrow. Let's give you a little something extra today. Not only is it the 3-month anniversary of the virus high, it's also 40 days from the virus low, March 23rd. So today is day number 40. Not sure if that matters, but we're up just over 31% from that low. 40 days, 31%, pushing 1% a day average. It's lagged a little bit. Remember, last time I shared this with you, we were at 1% average per day. Now we're at 40 days because we chopped around for the last 20 days or so. Just over 31% in the last 40 days. That is extreme. In fact, it's only happened 5 other times on record that we can find. The last time was coming out of the 2008 financial crisis. We had a rally of over 25% in less than 25% in less than 40 days. What's interesting is you look at the last 5 times. If you look out 3 months. So we're pretending, right? 40 days have gone by. What happens 3 months from now, 6 months from now? Well, we look at the last five times that that's happened. If you look out 3 months from those 5 times, positive every single time. If you look out 6 months from the last time these happened, again, it's only 5 data points, but if you look out, you've got positive 6 months in the future, positive every single time. Average performance for both time periods is about 16.5%. If you look out 1 year and say, I'm a long-term investor, I see what the markets did here. If they pull back, I'm willing to buy a little bit, but what can I expect? Looking at those 5 data points after the 1 year, we were down only 1 time. It was in 1938, if I remember correctly. We were down 5%, so it really wasn't even that big of a deal. And the average 1 year later, 38.6%. So you've got some support in the long run there. But the moral of the story is, if we fall from here, number one, do you think we're going to make new lows? Did a class and data and everything for our customers on that one? Probably not, but we did it. And the next question is, well, is it a worthwhile buy? If I'm a long-term investor, do I get scared about the next drop, or do I say, okay, I know that the odds are with me that we're going to be higher a while from now, a year from now, 3 months from now, 6 months from now. Do I take a shot? I think you have to take a shot, right? I mean, if the odds are in your favor, just like anything else in life, you take a shot. All right, our FinTips video yesterday was building a flat portfolio. We're going to expand on that, in particular with a couple of our funds, and try to talk about building a portfolio that's goal is really not to move at all. Right? You don't want to gain and you don't want to loss. You just want it to stay flat. So we covered that yesterday on our FinTips video. Tomorrow, already got a video loaded up, ready to go. Contributing to your Roth IRA from a brokerage account. You think it's a no-brainer, but there's some considerations there. We're going to go over a specific example of a customer's account moving money from one to the other, specifically how we did it, what makes sense and what doesn't make sense. So you have some considerations there, because that's actually more common than I thought. I didn't know people did that as much as I thought. We do it a lot here for customers, but it's crazy. And on Outside the Virus today, we talked about whether it's time to buy AutoZone or not. Yet Advanced Auto Parts reporting earnings today. AutoZone is next to go in that space, so we talked about that. Went over the details, pros and cons and all that stuff for that one. And then Cody covered, surprisingly, I was not expecting it, how to pick a financial advisor. We didn't talk about that. We were going to share that on the show, but there you go. You want to learn how to pick a financial advisor. It's a truly unbiased report, because I didn't know he was going to do that. So there you go. All right, let's go over to your sector breakdown on the day here. Like I mentioned earlier, tech led the way to start the day. You had tech higher. You had names like NVIDIA, which it still finished higher. It hit new highs there and pulled back a little bit, up 0.5% on the day. You had MasterCard, which is technically a fintech company, 0.25% higher on the day. Intel led the way to start the morning, faded throughout the day there. And Visa also led the way and then reversed course by the end of the day. The moral of the story here is you had tech leading the way, just like we're used to seeing. Everybody knows it. Tech's pushing us higher, but today it gave back, right? It was profit taking in tech, and because you didn't have the rest of the sectors trying to help you out, move things higher, you got a recipe for a pullback. Financials were the second weakest performing sector in the group today, down about 2.5%. You need tech, you need financials in order to get the markets higher. We did not have both of them today, and when tech joins financials, not a good sign. So anyways, a little bit of weakness there. Some of those stocks gave back some of their gains from yesterday, which had great gains yesterday. 3% pullback there on Bank of America. JP Morgan pulled back about 2% on the day. I don't need you anymore. You can pull back as much as you want. Wells Fargo pulled back about 6%. Those are some of the bigger names in the space there. If we look at Berkshire Hathaway, this is the biggest holding in the financial sector. And it was down 1.7% on the day. Because of that, you have a market that just can't get anything done, even before the afternoon pullback that we saw, which we could take a look at if you like. Oh boy. Communication services basically flat on the day. Facebook was over half the performance of this today. If it weren't for Facebook being higher on the day, communication services would have been lower on the day. Facebook accounting for a lion's share, well over half of the gain the flatness of the XLC today if you're taking a look at that one. All right, consumer discretionary also basically flat on the day. Just a couple names stick out. You had Amazon today up about 1%, hitting new 52-week highs as well. Then you had Nike in the mix, back above the 200-day moving average, which compare that to the S&P. Compare that to other stocks at the 200 days. Anybody above it? Who's showing that strength? If we just look at like the SPY, for example, just to use an ETF, you could see that Nike is stronger than the SPY or the S&P 500. If you look at the Dow ETF, obviously Nike is much stronger than the Dow at the moment. And so these are things you want to kind of pick out. Where's the strength? Where's the money going? Money's in Nike, of course, getting it above the 200-day moving average, and a 0.5% gain on a day where the S&P lost 1%, relative strength. Right? So you look at things like that and say, well, maybe I don't buy it here, but I'm interested to see if Nike can hold up this strength. Maybe you ask that question. I don't know. You know? You're just throwing ideas out there. Energy, worst performing sector of the day, down 3% on the day. Oil was pretty volatile today. It's back and forth, just kind of took the day off. If you're taking a look, it's had a massive run off of lows. And yesterday, the kind of blow off 10% top in the full session. Today, it's just normal to see it take a little bit of a break. Maybe it pulls back for a few days as it kind of catches its breath for hopefully the next run higher, unless you like lower oil prices, in which case, you're cheering it lower. That's cool too. All right, let's take a look at like a technical breakdown here. You got 11 new highs in the markets today. Newmont, Netflix, and Chipotle. Those are familiar names. They've been on the list there for the last 3 days at least. Newmont's been on there a lot more. We talked about Take-Two. Let's take a look. Take-Two Interactive. This is one out of the 11 new highs today that hit those highs, and actually all-time highs as well, and didn't pull back, right? The market sold off in the afternoon, which we can show in a second. They pulled back. Take-Two said no. We still have people wanting to buy that stock. It was still nice and strong. And then Amazon, I already mentioned there, it did well today. Up 1%, sitting at the highs, did pull back a little bit at the end of the day. Not a big deal. We'll take a look at the S&P 500 real quick, just because I mentioned it. We'll go back, take a 5-minute time period. There's your stock market. So we've got the start of the day right here, right? Got a little bit going on there, looking good. And then as you follow throughout the day, just struggling to get going, right? It poke up into positive territory, pull back. Positive territory, pull back to the flat line there. Get into positive territory, and then wham! Right before we hit the 3 o'clock time period, I just happened to glance over and saw this big drop there, and I thought, okay, well, that's impressive. There's a big pullback in the market, at least start of it. Very quick, all in a few minutes there. And then through the rest of the day, we just sold off, pulling everything with it. Put all the sectors in the mix there. Not one sector weathered this afternoon pullback. So we'll see what that means going into tomorrow. It could mean that we very much are just headed back towards the lows of the range. Even though yesterday was so exciting, we didn't really make any progress. We just moved towards the top of the range. So you look at yesterday, everybody's, yay, the markets are moving higher. Not really. They just moved towards the high of the range, and now maybe we get a little bit of a pullback, or if it happens to move higher from here, that'd be a great sign of strength, by the way, if that's something you're looking for. No new lows, right? Nothing to cover there, 0 new lows. The record of 336 new lows on March 13th remains intact this year. That would be the day that the best day of the year where we had the most stocks make new lows. Thankfully, we haven't seen that in quite a while there. All right, taking a look at some of the technical patterns on the chart for those of you that are active there. Remember, things are choppy right now, so it's very difficult to find leaders or laggards if that's what you're into. A great example would be Dollar Tree. So Dollar Tree had a great day today, about 2%. It basically held on to the day's gains, but overall it's choppy in the middle of a downtrend. So we're overall a very weak stock, and then if you look at the ultra short term here, just like a 2-month window, you've got nothing to suggest that your money is going to be put to use if you buy the stock, or if you bet on it going down, you have nothing to believe that you're going to be accurate at the moment. There are a lot of stocks like this, so if you're an active trader, you got to be careful here. We call it getting chopped up, right? Because you have the very likely scenario that you buy something, it falls real hard one day, you freak out and you sell it, then it turns around and bounces back up, and you buy it again, you go, oh my gosh, look at all this money I'm losing to the spread. Kind of crazy there. Anyways, some stocks that stick out here. AMAT, Applied Materials. So looking very much like Nike, completely different sector. But Applied Materials back above the 200-day as well, and it held. It held up there. I'm not saying it's a buy today, but that's something that grabs your attention, goes on a watch list if you're a short-term trader. Also, Workday, kind of an interesting reversal. This sticks out to me that the market sold off, couple things. Market sold off at the end of the day. Workday held up. Also, it's reversing all of yesterday. Think about what happened yesterday. The stock market, incredibly strong. Workday, basically pretty weak, one of the weaker days it's had in a while compared to how it normally moves, right? So the fact that it reversed all of the concern from yesterday, you got to imagine there's people asking that question. Why'd workday go down when the stock market was so strong? Even if there was bad news in the short term, why didn't it recover? Well, today it did fully recover, and it did it in sort of a mini 180 reversal kind of a way if you're into that. So there's a little bit of an underlying story in the last 2 days on that one. NVIDIA did hit the new highs today, a little extended, right? Maybe a little bit overdone in the short term. Look at the last couple times the stock gets extended in the short term. She likes to pull back. Stocks don't like to be too far away from the green line, which is the 20-day moving average. And in this case, we're just a little extended. Maybe that's a counter trend idea, something to look at. We'll see how NVIDIA does over the coming days. And lastly, we've got Intel maybe flirting with the idea of moving out of this range. Could you imagine if you decided to take a shot on the stock at, say, 62, where would you admit you're wrong? Right under this base, 56, right? Under the range here. There'd be no reason to stick with the stock if it fell beyond that. The risk to reward is sort of favorable, not great, but if you buy the stock here and you're shooting for the next area that it had troubles, well, that's about 68. So you're looking from 62 to 68, so a little over 1.5 times, maybe 1.5 times your risk there, because your risk is 56 to 62, right? So hopefully that helps there. If you don't understand any of that or don't get it, that's okay. I was just trying to share different things with you there. All right, let's talk about this. Stocks in the news for the day. Carvana. So Carvana, I believe, finished the day lower, almost 10%. Yikes. They're going to be issuing 5 million shares to, just have some extra money for, random use. They didn't really specify, just general operational use is basically what they did there. Marcus didn't like that. You're getting devalued if you own the stock. People obviously don't like that. They may move on to other stocks. Southwest Airlines up 2% on the day. Southwest said, hey, we're seeing some demand for flights. They're improving a little bit. Interestingly, on Outside the Virus, we covered the keyword search terms. How many people are searching for flight right now? Is there a lot of people? Is it ticking higher? Is it ticking lower? You have to tune in to see what happens there. Anyway, Southwest Airlines basically said demand picking up a little bit, just a little bit, and that's good news for them. Peloton a little bit higher on the day. They were upgraded at SunTrust. They had a lot of positive comments about them, and the analyst at SunTrust basically said, we think, well, price target $60, right? So that's where they think it's headed there in the next 12 months. They think that the numbers, so what happens is Peloton says our subscriptions are currently at X, we're doing well, and we think they're going to be X plus something, right? Well, SunTrust said, we think they're being light on their number. So they guided that they were going to hit a number, and at least this analyst at SunTrust said, we think they started light on that number, so the next time they report, they beat that number, and it looks like this amazing thing, like they did better than expected. SunTrust called them out on that and said, you know what, we're going to get in ahead of that and be at a $60 price target. So we'll see if they're right. It's kind of interesting. We talked about Zoom already. No need to cover that. Walmart had their earnings that came out. They beat on earnings. Really good earnings report overall. Sales were higher. You could expect for a moment there. That was basically the only place we could shop when everything was closed down there. The problem is costs. So Home Depot, Walmart, and others, we talked about Lowe's the other day on Outside the Virus, having an increase in their costs. Mainly because they had to put the stickers on the ground. You got to have people with masks. You got to have people walking around, extra employees guiding people to stay 6 feet away. There's an additional cost to that. Walmart hired a bunch of people. Walmart also paid out an additional bonus to their employees. So expenses ticked higher, not to mention they got to restock their shelves faster, so they need more people. So although earnings were good, costs went higher. That's the trouble with growing too fast or having a good quarter. Home Depot said the same thing. Lowe's, I expect, will say the same thing. And so that's kind of what you have going on there. Other than that, it was a really good quarter for Walmart. You can't really blame them there. And they also got rid of Jet.com. I saw that. There was a couple of years ago, they bought Jet.com. It's just a website where you buy stuff, and there was supposedly AI that was going to figure out what you liked. They bought them for $3.5 billion, something like that. And they just said, we're going to discontinue it. Could you imagine that? We paid all this money, and we're just going to stop. Not that it was bad. They weren't saying that anything went wrong. They just said, hey, we're finding better success with our own branded initiatives there in our own online process. So they use the technology from Jet.com, but they just don't need to brand it as Jet.com. Okay, what else do we got here? Oh, Disney, by the way. Did you see Disney lost one of the very people that led the Disney Plus initiative, got that thing out there. They launched it, kind of took the baby, let it grow up, and then they said, I'm leaving. So the Disney executive, was it Kevin Mayer? I think it was Kevin Mayer. Kevin Mayer. Yeah, he resigns to go over to ByteDance, which is TikTok. So there's a company that owns TikTok. Wow. I think that's going to be a big mistake, mister. I'm not sure that's something you wanted to do there, but he made his choice. Darden Restaurants up 0.5% on the day. Sales down 47% in the first part of May this could be a shutdown, right? Weekly cash rate burn at $10 million they're burning a week, which is a little bit less than expected. Kohl's down 7% on the day. They reported earnings, missed on earnings. They're like, look, the online stuff is going well for us. Sadly, it's not going good enough to offset the reduction in traffic in our brick and mortar stores, and the stock was a little bit lower. It continues to be one of those second to third rate type retailers when you compare them together. I'm not saying it's a bad store, but when you compare all retail together, they're just not anywhere in the top. They're not really in the top of the second tier. They're kind of lower second tier, top third tier if you're trying to rate those things together. What else do we have for you here? We've got earnings tomorrow. Analog devices, Lowe's, of course, McKesson, Target, that'd be interesting, Expedia, Limited Brands, and Take-Two, I believe. Yeah, okay. You got 2 Fed members speaking tomorrow, and the FOMC minutes coming out tomorrow as well. That'll get some headlines in the afternoon. Comes out 2 o'clock Eastern time. Dividends, ex-dividend day for Microsoft, 51 cents. Discovery Financial, 44 cents. Applied Materials, 22 cents. And you've got some changes. You got some changes in the S&P 500 again. All right, you got West Pharma. So West Pharma, they actually have a location right here by us. They're going to replace Helmerich Payne. HP is the symbol, not Hewlett-Packard, Helmerich Payne. They're going to be replacing them in the S&P 500. Helmerich Payne, is already loaded. They're going to replace JCPenney because of the, the issues JCPenney's having there. So JCPenney, 18 cents. They're going to replace them in the S&P 600. And then the last one is Physicians Realty. So REIT is going to, it was higher today by 3.5%, is going to replace West in the S&P 400. A little shuffling going on in there. If you don't care so much, just know that West Pharmaceutical is going to be taking their place in the S&P 500, and old Helmerich Payne's getting the boot, if you happen to care about that. All right, I'll take a look and see if I can answer some of your questions, and then we'll wrap it up from there and wish you guys a great rest of your day. Let's see what we can do. You think Zoom's still going to not be able to outgrow the old hacking there? Maybe. Stock price disagrees with you at the moment, but that's a highly valued stock right now. It's fascinating to watch that there. Yeah. You got Luckin back up and running there. Start trading again tomorrow morning on Luckin. It's going to be just over a month that thing's been halted. Yikes. Can we get any indication of where they're at? No. Still around the $4 mark. Cool. Hope it don't hurt too bad. Can you explain why the futures chart on the S&P would react to an SPX level and how they can react to each other? Well, one's a futures product, right? So what's the S&P at the moment? So the S&P futures product trading, come on, there we go. Trading the June contract. SPX is the index at this moment. That's the reason for a little discrepancy there. We just went through May. I believe May expired yesterday, actually. Did I miss it? So anyways, we moved on to the June contract. That's why you see the difference there. Remember, you're looking at the futures versus the index. Yep. Can you explore the relationship between similar businesses, Home Depot, Lowe's, Walmart, Target, AMD, etc.? Do they act similar during earnings? It's interesting. We did cover Home Depot and Lowe's. Lowe's is not the best in this quarter one earnings. Typically not too strong for them. We covered all the stats on that. I've thought about doing more things like that, and we were trying to play with the idea of maybe next earnings season having those deeper dives in individual stocks. So we're kind of preparing how do we pull the research and relevant data that's interesting. So it's a let's say 20% effort on our part right now, but it's a thought. Yep. Oh yeah. You caught the comment down there? I love it. Starting to have fun with that. Yeah. Why are your charts for 1 year and not from January to now? Sometimes I change them. I like to look back over 1 year because if you're looking year to date, if you always set them to year to date, this time of year, you're getting 5 months of data. We're not really short-term investors, short-term traders, so we're not necessarily looking at the ultra short term. I try to include some of that for you guys, but otherwise, we want to see big picture. Ideally, we'd use the weekly chart, but I don't think you guys would find that very interesting. All in all, it's just price represented in a different format. Yeah. Oh, yeah. Robert, I did miss that question. Robert says, should oil reach $38 a barrel? I hope she makes it there. In the midterm, it has considerable pullback. You want to hear your thoughts. Should oil reach $38 a barrel zone in the middle term before it has a considerable pull? Oh, you're asking, could it get there? So oil's a very trending stock. I think you see $35 a barrel if it continues from here, just because that's the last place that it had any real struggles. It's a very technical stock, likes to trade on technical analysis. That's not my opinion. You could just see it plain as day. So right now, momentum to the upside, just getting a little extended. Tomorrow you got oil inventory numbers. You hope for good numbers there. If you want to see oil moving higher, you hope to see a draw greater than expected, obviously, if you want oil to pull back. I think it'd be very healthy and normal if oil pulled back here this week would be awesome. Into next week and get everybody thinking, okay, the trend has changed. I'm getting my discount, right? People look at this and say, I'll buy it if it falls. You want to attract those people to come back for round 2 of the buying. So that'd be ideal, I think. If it keeps going higher, you lose more and more of the people that say, forget it, I missed it, I'm out. So we don't want to see that. Yep. Are financials a falling knife? No, but they're working on it, right? I mean, holy cow. So year to date, it's the second worst performing sector. 29.26% versus 35 in energy there. So obviously a very, very weak area for the financials. They need good economic news. Now, in the short term here, this just kind of chopping around sideways, it's not good that it's not participating with the market, but it's better than it moving lower. The real test for people to say, should I buy financials? Should we dive into that? Will be when the markets pull back, if they ever pull back down towards those lows. If you see that happen and financials do not pull back, that's your first hint that people will say, okay, well, it's holding up. Something strong there. This must be a good price, good value in this area. It's called relative strength. You'll see people interested in that. The last time the markets pulled back, financials did as well, so it was a little tough to say, well, this is where I'm going to dive in and start participating. So that would be what people look at. Let's watch the next pullback and see, do the financials hold up or do they pull back again? If so, you let it breathe a little more. Let it simmer. Yeah. You think, oh, you're asking if you can get Solar Edge to new highs. Obviously a very strong stock. The question is, if it gets to new highs, what are you doing? Are you hoping it gets there so you can sell? You got another 142, 143 area, somewhere in there. If that's your goal, to look for that as a target, there'd be no reason I would see that it can't hit that target in the short term. But yeah, see what you think. See what happens there. I love it. A couple more and then we'll let you run. Do most earnings gaps get filled? It depends on how long you want to look, right? So you say yes, in general, gaps get filled. Every gap gets filled at some point. But how long are you willing to wait? How long do you want to look? So in order to have an accurate stat on that, you have to say, all right, from the day of earnings, if the stock gapped up or down, how long until it traded at the day's close prior to earnings? So how many days go by? So you could either run it that way, or you could say, if a stock gaps up or down, use the prior day's close and look 30 days out and see if the prior day's close is greater or less than that number if it gapped up or down. So that's how, you know, speaking in code, I guess, programming language, that's how I would look at it if I were to give you something that was meaningful, right? To just generally say, does it fill a gap? All right, what are the details of that? Yep. Oh, yeah. I love it. How much to open an account on best? I'm not sure what that question means. Is 5% considered a pullback, 2% good pullbackers, depending on what? Depends on what you're looking at, right? So a 5% pullback on Cisco, for example, pretty impressive, right? If you see a 5% pullback on something like Tesla, I mean, it's a blip on the screen, right, compared to its normal volatility. So you want to look at the individual product that you're considering the pullback on. That's probably the best answer I can give you there. Then that way you could say, is this normal, right? We did a study a long time ago. If Tesla pulls back over 5%, how often does it bounce? And went through that. It turns out 5% wasn't a big enough range to use. You had to use a bigger range. Would not be the same on every stock. Yeah. What percentage of offensive stocks versus defensive stocks should be maintained for a 35-year-old? That's going to vary by person, of course. Myself, 37 years old, I say no defense. I say we're young, right? Go for it. Take the risk. What's the worst that can happen? Unless you're betting on one stock, don't do that. But if you have a nice diverse mix of stocks, you're mixed up there, nice portfolio, well, be as aggressive as possible, right? Do it while you're young. And it really I really point at that for the younger crowd, because I talk to the older crowd all day, every day. I talk to so many people that are retired or very close to retired, and they didn't take enough risk when they were younger, and now it means they have to make up for that with more dollars. And we don't always have more dollars. So while you're younger, hang on tight, be aggressive if you can stomach it and it makes sense for you, so that when you get older, you don't have to put more dollars away, because it's such a hard thing to tell somebody. It's a very hard thing to tell somebody. Anyways, I'll wrap it up there. I appreciate you guys hanging out with me. Remember, no closing beat tomorrow, no Outside the Virus. We'll be back on Thursday to do it all over again for you. Hope you enjoy the rest of your day. And yeah, thanks for watching.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.